Welcome to the Introduction to Accounting and Business, Part 4, the Accounting Equation. Elements of the accounting equation. Assets. Assets are resources owned by a business that have value. Assets can be physical items such as cash and supplies, or an automobile, or intangible assets such as patent rights, copyrights, and trademarks. Liabilities. Liabilities are the rights of creditors over the business debts. That is what the business owes others. Liabilities are often identified on the balance sheet by titles that include the word payable. Examples of liabilities include accounts payable, notes payable, or wages payable. Cash received before services are delivered, also referred to as unearned revenue, creates a liability to perform the services. Owner's equity. Owner's equity are the rights of the owners to the business's assets after all liabilities have been paid. For a proprietorship, the owner's equity is represented by the balance of the owner's capital account. Some typical assets. Cash. The business checking account is the source of funds used to make most payments. Accounts receivable. The amount that is owed to the business from a customer as a result of a sale or performance of a service. Typically, customers are sent invoices that identify the sale transaction, and they generally have 30 days to make a payment. Often, invoices provide terms that offer an incentive if the customer pays within a shortened period of time. For example, terms of 2/10 net 30 means the customer may take 2% off of their amount due if they pay the bill within 10 days, as opposed to waiting to pay the full amount at the end of 30 days. Land. Property such as the lot or acreage owned by the business for its operations location also can sometimes be owned for investment purposes. Buildings. Buildings that are owned by the business generally used in operations or could be rented to others. Equipment. Machinery or other business operations equipment owned by the business. Supplies. Actually, a prepaid expense that is treated as an asset until used up. Once used up, supplies are then expensed at the end of each accounting period through what are known as adjusting entries. Adjustments reduce the amount the business has in the supplies account and increases the business supplies expense. Prepaid expenses. Similar to supplies, other items or services the business pays for in advance of using or receiving the benefit from. When they first purchase or pay the prepaid expense, the amount is treated as an asset until it is used up, at which time an adjustment is made, reducing the asset account and increasing the business's expense. This adjusting process usually occurs at the end of each accounting period. It could be monthly, quarterly, and in some cases could be yearly. Some common examples of prepaid expenses are prepaid insurance and prepaid rent. Liability accounts. Accounts payable is a liability that will be paid in the near future, typically within 30 business days. Examples are when companies buy supplies or merchandise from vendors on account. They receive the items they are buying, but do not pay cash immediately. They pay when the invoice comes due, based on the terms of the agreement to pay. Unearned revenue. Cash received before services are delivered creates a liability to perform the services. These future service commitments are called unearned revenues. Examples of unearned revenues are magazine subscriptions received by a publisher, tuition received by a college at the beginning of a term, and rent received by a landlord for several months in advance. Wages payable. Sometimes when the employees have worked the hours for the payroll, but the employer's payday doesn't happen until the first week of the next period, the wages expense that has accrued must be expensed or matched with the revenue in the current period. The wages payable account represents this amount of wages that has already been expensed but has not yet been paid to the employees. Unearned rent is an account title used for unearned revenue related to rent monies that have been received, but the monies that the rent is to pay for have not arrived yet. For instance, a tenant paid the landlord for 6 months' rent in advance. As each month the rent monies were to cover arrive, the landlord can claim the rent as revenue, thus accruing the rent revenue and reducing the amount of unearned rent still remaining as a liability. Notes payable. When a company owes a vendor for a fairly major purchase and needs additional time to make the payment, the two parties will work out new terms allowing for the additional time in the form of a note payable, which could run 60, 90, or 120 days, for example. Owner's equity. Revenue increases owner's equity. Typical accounts for the revenue would be sales, fees earned, rent revenue, or interest revenue. Expenses decrease owner's equity. Some typical expense accounts could be wages expense, utilities expense, rent expense, supplies expense, and miscellaneous expense. Owner's investments increase the owner's equity. The account used for owner's investments is the capital account. Owner's withdrawals decrease owner's equity. The account used when the owner withdraws money or assets from the business is the drawing account. A chart of accounts should meet the needs of a company's managers and other users of its financial statements. The accounts within the chart of accounts are numbered for use as references. A numbering system is normally used so that new accounts can be added without affecting other account numbers. In this example chart of accounts, a two-digit numbering system is being used. The first digit indicates the major account group of the ledger in which the account is located. Accounts beginning with 1 represent assets, 2 liabilities, 3 owner's equity, 4 revenue, and 5 expenses. The second digit indicates the location of the account within its group. Thank you for watching this video podcast of the Introduction to Accounting and Business. It was made possible by the generosity and commitment of the WICPA Educational Foundation to promote the career of accounting among high school students. Thank you.